Hey y'all, Ryan with TrendLizard.com. Crazy market per the usual. Seemed like a good opportunity to put something out that I hadn't done in a while. I hadn't done a market update for everybody using the Elliott wave theory, so I want to do that today. I'm going to take a look at a bunch of different charts across the market. We're going to take a look at the stock market indexes. We're going to take a look at some market segments and some stocks just to kind of update you where the Elliott wave theory believes these things are in their Elliott wave progression, and if we can determine where the price movement of these things are in their Elliott wave progression, we know where they're going in the future. And we have some pretty clear signals right now that make it fairly apparent what is going on in the stock market. It's not the best news, but I think it is something that is worth your time so you know how to proceed as you go forward here with the market and as these crazy swings continue. One of the other things I wanted to do is make people aware that we are changing our service at TrendLizard.com. Up to this point, we have done a couple different things. We've offered several different service levels. We've offered stock, crypto coverage, all this different stuff multiple times during the week. We've changed all that, and we want to get more dialed in on matching the analysis we provide with what is pertinent to you and the exact amount of information that you need. So what we've done is we've gone to a once a week after every Friday session publication. That's it. It's all encompassing. It looks at everything that we have to offer, looks at stocks, looks at indexes, looks at market indexes, looks at market segments, crypto, all of it in one place. And all of it is free. You don't have to sign up or anything like that. You just can go to this link right here and basically log in, click on the red button, and that'll show you our weekly update again at the end of every session on Friday. So please come visit. Again, it's free. You don't have to do anything. Just click on the buttons and you can see exactly what it is that we're offering at TrendLizard and what our value proposition is. So with that, we're going to go ahead and take a look at a bunch of different charts. We'll just kind of power through, show you what's going on, tell you what's coming in the future. Hopefully it's helpful information. If you have any questions, please feel free to put them in the comment section below, and don't forget to subscribe. So here we go. Let's dive into some charts. All right, y'all, to state the obvious, really the most important thing when trading the stock market is what the overall market is doing. And we quantify what the overall market is doing by looking at the S&P 500 mainly, and then as the Nasdaq and the Dow as well. But we're going to take a look at all three and kind of show you where we think it is in its ever-progressing Elliott wave pattern. We've showed this labeling before in previous videos. Here's the same thing, and the gist of it is this. As you know, basic Elliott wave 101, trends play out in 5-wave patterns, and then when they complete, they are corrected by larger 3-wave ABC pullbacks. What we believe has happened is off the 2009 low that happened after the financial crisis back here, is that we've been in a very large 5-wave advance, 1, 2, 3, 4, 5, that ended in late 2021, and since then we've been in that larger degree counter-trend pullback. Some things we know: this thing lasted 13 years. A pullback is going to last probably several years, at least a handful of years before it's fully corrected. A larger correction is confirmed with a move below 3,200 on the S&P 500 at any point, but everything we're seeing so far suggests that this is the case. So what that has us is basically the 5-wave completed, a large A wave down, the first leg of that 3-wave pullback in 2022. We're currently in a B wave recovery, and when that B wave recovery completes, we would expect another down leg, something similar to what we saw in 2022, something that finds its way into this yellow support area before it ultimately completes. And I think this lines up on a number of different ways you want to look at the market, but I think this is what's going on. We are currently in that nice recovery, and I think that will continue as we will look at. But overall, there's pretty clear reasons to think that we're still in this larger pullback, and there's work to do before this entire 5-wave advance is completed. So let's zoom in here, take a look at closer action. This is a little more detail on that pullback that we've been in off of the late 2021 high. And it does look like a counter trend move. That's good news. It suggests that on a very large time frame, the trend is still up, but obviously this pullback has to run its course before price is able to actually trend in an upward fashion. It looks like a wave completed in October. Since then, we've been in kind of this choppy, ever-reversing recovery move off of October's low. This fits as a B wave. This is exactly how we expect B waves to play out. Very chaotic, very difficult to stay ahead of. As long as we know that, we can largely just expect, the right things and expect the move to generally continue, but not to put too many expectations on it other than that. So let's go ahead and zoom in just on the B wave. This takes a look at that recovery, and the reason that we think that a larger pullback is going to occur is because this recovery itself has been a counter trend move. So we're getting counter trend movement in both directions. This looks like counter trend movement. Like I said, counter trend moves play out in 3-wave patterns, and that's exactly what we're seeing as we go here. There's been a pullback since February's high, got a down leg, an up leg. We think that a larger B wave could form before we head up again. Like I said, we expect chaos. We're kind of getting it, and we expect more ahead. We expect this recovery to ultimately continue, but for that move to ultimately prove to be just a counter trend recovery within a larger decline. Now, if we go over to the Dow, what we see is that we see a very clear case for a larger recovery to form. We have the same down leg, counter trend type movement, but we have a much sharper and more impressive recovery off of October's low. And once that happened, we got a 3-wave pullback. Again, on a smaller scale, it's the same thing. Trendy 5-wave up move, 3-wave pullback. That implies that a larger recovery is going to form off of October's low before price heads higher. That's a bullish thing for the shorter time frames. We can't expect higher prices in the shorter time frames. But again, we think that this entire move is a counter trend recovery within a larger decline. And when we move to the Nasdaq, there's some pretty solid reasons to think that. Here is that chart, and here's the low in October on the Nasdaq, and you see what's happened off of that low. It chopped around. It's obviously become relatively strong in 2023, and we're seeing more strength, and this guy is really leading the way. Doesn't change the fact that this is all counter trend price movement. We can be confident, just like the other market indexes, that a larger recovery is going to ultimately form before price turns back down, but that doesn't change the nature of the move. The move is a counter trend recovery, and so higher prices are expected in the shorter time frames. But on any larger time frame, again, we have to expect the decline to continue on the stock market indexes, and that's going to dictate everything that happens in the stock market. This is not the end of the bear market that we've been in 2022. More has to be expected. So let's take a look at a few U.S. market sectors. Let's start with real estate, just because it provides some information. The down leg has been littered with counter-trend ABC moves. That's a good thing on a larger time frame. But if we look at its recovery off of October's low, it's a very clear ABC move that can only mean that the pullback is not yet over. So we're expecting, again, for real estate to continue south as a larger counter-trend pullback plays out. Let's take a look at telecom. This is that chart. Again, off of October's low, very clear ABC recovery. If this was the end of the bear market and price was going to turn higher from here, this isn't the type of price action we should be seeing. We should be seeing trendy 5-wave patterns. That's not what's happening. We're seeing ABC counter trend moves. And then what happened to the downside in February and March on telecom is we did see some trendy downside movement. So this guy might be ready to head lower. Whatever the case may be, this is a counter trend bounce. This is the bear market low. To this point, we have to expect this move or this low to be breached and for a larger decline to ultimately form. Now, one of the market sectors that's definitely been in the news lately is financials. Obviously, the banking crisis. I don't even know if you can call it that at this point. But here's a look at the financials price chart. It had a larger down leg into basically June's low. Since then, it's been back and forth and has now returned towards that low. Obviously, all this action we've seen off of June's low is one big counter trend pattern. And it's very clear that its decline is not yet over. It's been a sharp decline. It's been recovering in March. There's no good reason to think that this is the end of the decline. Since this is a counter trend move, the expectation has to be for another large down leg. Generally, a trendy 5-wave move ends these types of patterns. We haven't seen that yet. We would expect a new low, all that stuff. This decline is not yet over. So there is that. Let us go ahead and move on now to global markets because they provide their own set of information. We're going to start with India. This is India off of the 2020 low. It gave us this beautiful 5-wave advance. In late 2021, it started a lower, kind of nasty little choppy decline that put a low back in June. Since then, it's had this choppy, ugly recovery move. There is no way that this is trendy upside action. And for this pullback to be over, this would have to be trendy upside action. Instead, it's more counter trend price action. The only objective way to look at this is calling this a B wave with the expectation for another C wave decline, which ultimately finds a low somewhere in this yellow area in the future. So might get some strength in the near term, but like the stock market indexes and the other market sectors, it doesn't look like the pullback is over. Let's take a look now at EWA. This is the Australia ETF, and it comes to the same conclusion. You have this big decline that moved into October's low, had a very impressive recovery, but that recovery ultimately proved to be an ABC counter-trend move. If we're getting counter-trend movement off of the low for the decline, the expectation has to be for a visit back to this low at some point, and that seems to be bearing out because the decline in 2023 has trendy aspects to it. We'll see if it heads directly there. Whatever the case may be, we got to think that a larger pullback is going to form on EWA. This is EWG, and this provides a little different perspective. It's had a nice 5-wave advance off of October's low, and then off of that low, we've had this pullback, which was pretty small, and then a recovery back to the high. So the implication here is that we are getting trendy upside movement and counter-trend downside movement. That counter-trend pullback may not be over yet, but either way, on the shorter time frames, Germany is in a position for it to give us another trendy multi-month 5-wave advance once this pullback completes. So at least that's something bullish on the shorter time frames. Similar thing anyway with EWU. This is the United Kingdom ETF. We got a nice trendy 5-wave advance off of October's low, a pullback that has proven to be a counter-trend move. We'll find out shortly if that counter-trend move is over or not. But either way, when you're getting trendy upside movement and counter-trend downside movement, looks like a buying opportunity. And this is one of many global markets and other ETFs that we follow at TrendLizard.com, and we are finding the good entry points for these trades as we go. That's why you should come visit us and cash in on that free offering that we have for you until May 1st. So that's that one. Let's take a look at VEU. This is basically the world except for the US. So it just looks at the global markets as a whole. And it's also shown some pretty interesting things, some pretty interesting patterns here. Had this 5-wave advance. It had a very choppy, funky pullback that retraced about 61.8% of this up leg, which is very important support. And then off of that low, we're getting some trendy upside action and then a counter trend pullback. So we can't say that this entire pullback is over, but at least on this guy, it's possible because you have this setup for higher prices on the shorter time frames. You have a 5-wave up leg, a counter trend pullback, and then what should happen is we should get another 5-wave up leg, probably one that moves back towards that 2021 high. As we go, we'll find out if a major low is in. But on the shorter time frame, the VEU, or the world minus US as I call it, is set up for higher prices. Let's move on now to precious metals. At least we'll take a look at gold through its ETF. GLD, some bullish things that have been going on here. It had a pullback that began back in 2020, gave us a large A wave down, revisited it with this gigantic B wave recovery, almost moved to a new high, failed to do so, turned back down, maybe something that's going to happen for the overall market like we've discussed. But as you can see overall, we have this nice ABC pullback, and off of that low that was recorded in early November, it's kind of funky price action. It's hard to be super confident that it's trendy, but the potential is there, and it's just more proof that this is one big counter trend pullback and that overall gold is in a position to continue higher, and it'll be in a position to continue higher directly from here as long as it's able to stay above the level 175. A move below that would indicate at least some type of larger correction, and that would be a good point to kind of step back and see what is coming from there. Next up, we want to take a look at USO, which is the ETF for oil. This is the chart off of the 2021 low, 2020 low. It gave us a nice 5-wave advance to the upside. And just like I'm talking basic Elliott wave 101, a 5-wave advance completes. That means it's going to undergo correction, and that's exactly what's happened. It's been in about a year-long pullback since then. That pullback does not seem over yet. It's given us an A wave down, and then basically chopped around. It set a new low in March, but quickly reversed higher. My belief is that this is all B-wave action. It has tested its yellow support area here, and this yellow support area is basically just the major Fibonacci retracements of this entire up leg. So the top of the yellow support is a 38.2% retracement. This is a 61.8% retracement on the lower side. So we do expect a low to happen somewhere here, but we need the right form for this pullback to complete, and it doesn't look like we've got an ending C wave to the downside yet. So overall, oil looks pretty bullish, but it looks like we're going to get a larger pullback off of that 2022 high here as well. So next, let us take a look at UUP, which is the US dollar. ETF, just an easy way to trade the dollar. It gave us a nice 5-wave advance to the upside. And again, once 5 waves complete, price turns the other way and corrects. Now to the downside off of that 2022 high, we got a trendy 5-wave down leg. Looks like wave A, and then a bounce, which looks like a B wave. The B wave is likely not over yet. Should get a larger recovery, and then a C wave down to a new low that finds a low somewhere in the yellow Fibonacci support area. So there are those guys. We're going to do some quick hitters now on some stocks. Let's start with Apple. Here's that chart. This has just been one big choppy mess. The bullish aspect is that it's all counter trend movement. The trend is up. The trend was up going into this high right here, and now we've had this counter trend choppy price action. Clearly, this is not a new trend to the downside. This is counter trend price action. But our belief is that the counter trend price action is not over. The expectation is for a move back up to the high and then another down leg back towards these lows here. Subscribers at TrendLizard.com bought in right here at this green circle, and we've been running it. We've been looking for a move up to the 175, 180 area, at which point we will close. Needs to stay above 152 for that bullish setup to remain intact. Next up is Amazon. Now this is its recovery off of the bull market decline, and it's not necessarily a bullish thing. You see what's happened to the upside is we have counter trend price action to the upside into February's high, and then a pullback here, which looks like a B wave. Basically, we're expecting a larger recovery to form, but that recovery looks like a counter trend move within a larger decline, just like we're saying in the overall market. So it's something that can be traded on the shorter time frames. But on any larger time frame, these are not buy and holds at this point. A larger pullback has to be expected. Next up is Meta, old Facebook. We were lucky enough to buy this guy right at the start of the year. It's been an absolute stud since then. It looks like it's giving us a 5-wave move to the upside that is near completion. And recall what happens when a 5-wave move completes. We get a larger pullback. A move below 190 at any point would be a clear indication that this 5-wave advance is over and something larger to the downside is now underway on Meta, and that would be the point that we are exiting our current trade. And that stop will go higher if price continues to go higher. Next up is FedEx. This guy is pretty interesting and pretty bullish, largely because the pullback off its 2021 high is a very clear ABC move. What do we know about ABC moves? They're counter trend moves going against the trend. So the overall trend on FedEx must be up. It's been in a very large recovery. It might be getting closer to the end of this run off of October's low, and a larger pullback should form. But once we get that larger pullback that corrects this up leg, should be a pretty good opportunity to buy the next up leg that's going to emerge. Should be another 5-wave move that happens at that point. Next up is Google, and this one makes it pretty darn clear. We have a down move in 2022 that looks like a trendy 5-wave decline, and then like the Nasdaq itself, all this back and forth action off of that low. This does not look like the start of a new trend. Very much looks like counter trend price action that is likely to continue on the shorter time frames. Stop me if you've heard that before, but overall does not look like a major low. So I again would not be buying anything like this with the intention of holding it, because the setup overall is for a larger decline to form and could give us another big down leg, something like we saw in 2022. Hopefully not, but at the very least we have to expect some type of larger pullback, so that requires some caution. Now, in the line of banking stuff, Goldman Sachs, with the kind of the banking or financial crisis that's been popping up lately, there's a pretty clear statement that we have here on Goldman Sachs. You have that same down leg that so many other stocks, ETFs, and market sectors underwent in 2022. And then you have this really nice recovery that's happened since June and July. It's been a great recovery, but it's still a counter trend move. This is a very clear indication when you're having ABC patterns as opposed to 5-wave patterns that whatever happened down here to the downside is not over. So maybe you get a larger recovery here. Doesn't matter. It's a counter trend move, and at some point we have to expect Goldman Sachs to head back to and probably to a new low for this large pullback. One last chart we're going to take a look at here. This is Tesla. This is the low that occurred after some serious cleansing that took place. And off of this low, it looks pretty bullish. We have a trendy, strong 5-wave up move, and then this initial down leg in February looks like an ABC move. Now, it's proving to be just wave A of a larger ABC move, so we would expect a move back into this yellow area before it completes. But once this entire correction completes to the downside, there's a very clear setup for another big up leg like we saw here But obviously you want to wait for that to start. Obviously this big up leg here doubled the price of Tesla. Could get something similar once you get another down leg that completes this pullback here. So there are opportunities out there, but I think the overlying theme is that we're in shorter term time frame recoveries, but overall the entire decline is not yet over. That's very valuable, especially for people who are thinking, is this the time to buy and sit and hold and just, do that thing? No, I would say it's more of a short-term play, short to mid-term players kind of market. And if you're kind of feeling like, man, I missed a low, darn it, I need to start being super aggressive and going after it, I don't agree. I think there's going to be another opportunity once everything runs its course and we move back to the lows that were set in October or wherever else, depending on what you're looking at. But overall, that is our outlook. I hope that's helpful. This is what Elliott Wave does for you. This is what we do at TrendLizard.com. We apply the Elliott Wave theory to just about everything that we can to find the best trading opportunities wherever we can, and that's a service we offer. Come check out the free service that we have right now until May 1st. Don't have to sign up. Don't have to give me your name. Don't have to do anything. Just click on it. Take a look. Hopefully it's something you like, and then when May 1st rolls around, hopefully you want to sign up and become a member of our service. So have a wonderful day. I will talk to you again very soon. Take care.